So it's 4:01 in the afternoon. So good afternoon, ladies and gentlemen, and welcome to this webinar. Good afternoon also to all panelists who were already talking to each other informally prior to this webinar. So all welcome to this webinar entitled Macro Crisis, Micro Solutions. Only small difference in pronunciation, but quite a difference in meaning, of course, on microfinance as a lever against poverty. That's the topic of this afternoon's session. And this session is part of UCSIA's U-Turn. So my name is Stijn Latré. I'm the director of UCSIA, the University Center St. Ignatius, Antwerp. And we've been developing a series of webinars called U-Turn, so indicating that after the corona crisis or even during already the pandemic, we cannot return to business as usual, or also meaning that this crisis is likely to reinforce existing tendencies in society, socio-ecological reforms, social and ecological justice, these kind of issues, but also financial concerns and financial evolutions that might take place during and after this corona pandemic. And after our series in the year 2020, last year, we collected some essays in a book called The U-Turn, and the Dutch-speaking members of the audience or participants in the audience, they can find a digital copy of this book by the end of this month, by the end of February, on our website. So you're invited to find there the book of the U-Turn, UCSIA's book. Okay, but I'm not here to talk about UCSIA in a great extent. So I'll now take you to the rules of engagement of this webinar. So if you will experience any technical problems, you can post a message in the chat to all panelists where the host UCSIA team or UCSIA co-host will take up your message. I recall that this session is being recorded, so you can view it at ease at home afterwards again if you want to review certain passages or to see these again. This is a webinar, Zoom webinar. That means that the participant's microphone is by default switched off, turned off. The same applies to your camera, so you won't be visible nor audible, but your way of participation is by the Q&A for the formal questions to the speakers. So you can ask direct questions to the speakers. Please also indicate to which speaker you want to ask a question, mention the name, and post your questions in the Q&A. You see like the double text balloon there at the bottom of your screen. If you want to exchange some information or to say hello to someone and so on, then you can use the chat function. That's more for the informal communication. So now I'm happy to grant the floor to Professor Tom De Herdt. He is professor at the Institute for Development Policy at University of Antwerp, and he is your chairman for this afternoon's session. Tom, the floor is yours.
Thank you very much, Stijn. Yes, we have a very nice seminar this afternoon on macro crisis, micro solutions, on microfinance as a lever against poverty, and we have a very respected panel to talk us about this theme and to engage in a debate about it. The microfinance movement, in fact, it has grown over the last decades. It has taken a significant share of the informal sector, a predominance of trade and share of commerce activities, and vulnerable clients who have few resources to cushion the impacts of the crisis. So one would expect the microfinance movement to cater also for this macro crisis, perhaps. Of course, the movement has its own challenges, and we will come to know about them. The crisis, the macro crisis, has also affected the microfinance institutions themselves. Lockdown has caused a sharp drop in income of the microfinance borrowers who have little in the form of savings. The industry relies to a large extent on social investors who are struggling themselves today, and the pandemic exposes the fragility of that capital structure. So on one hand, it could be a promise or perhaps a solution, especially in context where social insurance systems are not working or not working well enough. On the other hand, it may be in crisis itself, and I guess we will hear about these two sides. The three core questions for this afternoon are: how effective is microfinance in the fight against poverty? Can it cope with this sort of crisis? And does microfinance need to be revisited? We're talking of a U-turn in the series of these debates. A U-turn, of course, speaking about the functioning of the world economy as a whole, but also perhaps we will be talking about the U-turn within the microfinance movement today. Let me introduce the three speakers of this afternoon. First comes Cécile Lapenu, Executive Director of CERISE. CERISE is the French non-profit organization dedicated to responsible and ethical finance. It's a pioneer in social performance management and it's dedicated to finding solutions for mission-driven organizations to make their social goals a reality. Cécile will introduce CERISE further on. Cécile Lapenu herself is executive director. She held the presidency of the European Microfinance Platform in 2013. She's a board member of the Social Performance Task Force, and before joining CERISE in 2001, she worked as an expert in rural finance for IFPRI and CIRAD. She has a PhD in agricultural economics, and she defended her doctoral thesis on microfinance in Indonesia. So Cécile Lapenu will present for about half an hour, and then we will have two responses, one from Loïc de Cannière and a second one from Johan Bastiaensen. Loïc de Cannière is CEO of INCOFIN. INCOFIN is investment management. Since 2001, he has turned INCOFIN into one of the most prominent microfinance and impact investment fund managers. Loïc is a strong promoter of social performance parameters into impact investing, and he participates in leading industry initiatives in this respect. And then finally, my colleague, Johan Bastiaensen, chair of the Institute of Development Policy of the University of Antwerp. He has an historical research interest, and in fact, I was happy to be part of that history as well, to a small extent at least. In microfinance for rural development, immediately related to his involvement in the creation and the development of the Fondo de Desarrollo Local, FDL, the largest and most rural agricultural microfinance institution in Nicaragua. Of course, Johan is much, much more, but he's this too. So let's give the floor immediately to Cécile. Cécile Lapenu for the next 30 minutes. Cécile, perhaps I will give you a signal 5 minutes before the end of your time, if that's okay.
Okay, and yes, you can call me also if I don't see the signal, because I will see my slides. And
okay.
So hello everybody. Very happy to be more or less with you, off site with you today, to exchange on microfinance and discuss with Loïc and Johan on the next steps for microfinance and a little bit the history of also of microfinance. As it has been shared, we want to discuss a little bit how effective is microfinance in the fight against poverty, and what can we learn from the current crisis, and what can be done in the next steps for microfinance. Just a few words about CERISE. CERISE is a French organization. We are working with a network of partners all around the world to guide organizations to put their mission into practice. So we have started 20 years ago with microfinance organization to see how they could strengthen the social links with their clients and protect their clients. And then we have been working also with social enterprises and with investors, investing in those organizations, those field organizations, to make sure that they can work on their social strategy. And we provide tools and approaches to guide organization to put their mission into practice. So social audit tools that are free online for organization to use them, and we work with our partners to support the improvement of practices on a continuous basis. The idea is really to develop tools from the field to be helpful for the organization themselves. So, and it's why we draw on a very large network of partners in Africa, Latin America, and Asia, and investors in Europe and Northern America. So we have been working in microfinance for a long time, and I've been working on this field for even more long time than I was in CERISE. And one of the key questions has always been how microfinance can be a practical tool to fight against poverty. Is it really the case? So just as a reminder, because some of you are a little bit new to this topic, I wanted to share a little bit what is microfinance. So it started with the idea that you can provide small loans to low-income people, generally excluded from traditional financial sector, and that those loans could be used to invest in income-generating activities to improve the livelihood of the clients. Just to give you an idea, microcredit in an emerging country is around 30 to 5,000 euro. Microcredit in the developed countries, and you have microcredit in Belgium, for example, with MicroStart, is around 2,000 to 20,000 euro, just to give you an idea. And the idea is that small amounts of loans can provide high impact with a very diverse range of clients reached by microfinance. So the idea is to have a model as a social business with a banking process, but alternative form of guarantees to be able to reach poor clients and excluded clients from the traditional banking system, and to have a social impact. So that's what we call double bottom line organization with social and financial performance. And now the environmental dimension becomes also a standard for most of the financial service provider. However, and in spite of the nice figure of Mohamed Yunus and all the advertisement around microfinance, we have realized in the sector that it's not the panacea to fight against poverty. And you will have discussion on this also with Loïc and Johan. We have seen that microfinance may have overpromised on what they can really do in the fight against poverty. What we see in the field and what have been observed also from academics research is that it's to start with, it can help in consumption smoothing and supporting economic activities and for the financial health of the clients. But it's more complex to really help the clients go out of poverty. And in particular, there are some risks associated with microfinance. It's not just because you are a microfinance organization that you are doing good, and it's not longer taken for granted that you have a social mission because you are a microfinance organization. So it's not enough to say that you have a social mission to achieve it. And there is a lot of work that has been done by the practitioners, by the support organization, to make sure that microfinance can have a better impact on its clients, avoiding over-indebtedness, avoiding ensuring fair treatment of clients, and making sure that it can provide adapted services, not just tiny loans that are repaid every weeks in a group, to make sure that it can really provide some change for the clients. So first of all, microfinance, to be able to have a positive impact on its clients need to propose a wide range of adapted products and services to answer to different needs and preferences of its clients. And that's not the simple aspect of microfinance. You just give a tiny loan that is repaid every week, and at the end you will have people out of poverty. No, you have to really think about what type of services you will provide to your clients, microloans, but also loans for SMEs, for example, so larger loans, savings, microinsurance. You have to adapt and make flexible repayment schedules, for example, to adapt for agricultural loans, for example, compared to loans for micro enterprises or for services. Sometimes you need to form a group to get a loan and to have other forms of guarantee, social links and social guarantee instead of physical guarantees. But on other cases, you better use individual loans for the clients and some form of physical guarantees to provide larger loans, for example, or more adapted loans to the specific needs of one client. And microfinance institutions also had to think about what are the basic needs of their clients. So you can provide loans for productive activities, but sometimes also for housing, for education, for health. So you may have different needs and different answers to those needs. The idea is also that people have low financial costs, so that those loans should be accessible. And that's also a key question for microfinance, because sometimes prices have been quite high. And so there are discussions on how to make the organization efficient enough to be able to provide reasonable and responsible pricing to their clients. And finally, after lots of discussion, the sector has come to a conclusion that you also need to provide non-financial services to make sure that the loans and the financial services are better used by the clients. So business development, financial literacy, gender empowerment, green training also now to make sure that clients can also cope with climate change and vulnerability. So yes, microfinance can play a role in poverty alleviation, but under very strict conditions and very in-depth analysis of what the clients needs and prefer. And for that, lots of work has been done in the sector with the issue of social performance. In fact, the idea is really for the organization to make sure that they have a balanced management, combining their social objective and their financial sustainability, and that it's not just, as we said at the beginning, it's not just taken for granted that because you are doing social microfinance, you have a strong mission. You have really to have a strong commitment and an effective management to the social mission to lead to better impact on the clients and beneficiaries. And you have to work in your organization to understand what should be the processes and procedures, what should be the products that you will provide, what are understanding the needs of your clients to adapt services and have a committed governance to those social objectives, for example, before you can really balance your financial and social performance and have a chance to have a positive impact on your clients. So that's a key issue around microfinance. And it's not so simple as it could have been thought about at the beginning of the microfinance sector. So a lot of work has been done around social performance management, helping the organization to put their social mission into practice. And as you see, there is a wide range of tools and approaches that can guide microfinance, not just in measuring their impact at the end for their clients, but also understanding how they should put in place their internal systems train their staff, have committed boards and top management, have adapted services to make sure that their social mission can be translated into practice. So that's something that is key for the microfinance sector, and that may have been sometimes forgotten on the ideal vision of microfinance as a tool to alleviate poverty. So how effective is microfinance in the fight against poverty? It can be possible with the condition that there is strong social performance management, with loyal staff, loyal clients, and better impacts. But for really strong impact on poverty reduction, we know that it's not just the issue of microfinance, but it should be into a context where you can really walk into poverty alleviation. So microfinance alone cannot alleviate fully the poverty and be efficient enough to save all the clients and put them out of poverty. And even if they want to play a role, they have to be very cautious on what they can do and how they will manage their practices to make sure that they have a positive impact on their clients. So not so easy. In this crisis, what did we see and what was some of the lessons? And of course, Johan and Loïc will share much more of this. But what we have seen and can microfinance cope with this crisis? For me, there are two key elements that can be that for me are key lessons from the crisis. Of course, it has been very hard for the clients. It has been very hard for the microfinance organization also, because there were issues and activities were stopped in some countries. So it was hard. But we have seen also that, first of all, microfinance can play its role as a platform for social change. And we have seen a lot of organizations providing information to and support to the last mile. And here I share a blog and two pictures from BRAC in Bangladesh. And BRAC has also microfinance organization in different countries in Tanzania, Uganda, etc. They have really we have seen microfinance organization being very close from their clients and customer, being able to share information and to share key messages on health and security. And we see people washing their hands and motorcycle going through the village to explain what was the risks and how to cope with the risks. We have seen also organization using savings and emergency loans in particular to guide and help their clients, and trying to understand what was going on with their clients to adapt their answers. And what I think also has been a key lesson from the crisis is the reactivity and the coordination among the different stakeholders. We have seen, for example, a tool that is called a client interview tool, which has been designed jointly by different microfinance organizations and investors and key stakeholders to guide microfinance institutions to conduct a survey on their clients, to understand the differences of impact among the clients and take informed decisions to adapt a response. And this has been pushed by coordination of investors. And we have seen very concrete, within 2 months, for example, the crisis has hit some of the countries in March or April. And in May and June, already plenty of organizations had collected feedback from their clients on a representative sample of clients to understand who was hit, who was more had more problem, less problems, and to adapt the answer to the crisis. So we have seen, for example, and that was the case on the picture above, BRAC, Bangladesh, have seen people withdrawing savings, large amount of savings. So they said, okay, they need savings to cope with the crisis. When they called their clients and interviewed them on what was the challenges and why they were withdrawing savings, people said, we are afraid that you as an organization will close and that we will lose our savings. So in fact, they were not withdrawing, in some cases, they were not withdrawing savings because they needed savings, but because they were afraid that the organization could collapse. So the picture above here is BRAC explaining to their clients that they are strong and that they are not they will not close, and that clients should only withdraw saving if they really need saving, but if not, they can trust the organization. So that was one of the answer. Other answer, for example, with CEF in South Africa, large microfinance organization in South Africa. They wanted to cut all the loans because they thought people could not repay. And they saw that in the agricultural sector, for example, the crisis was less strong than in the cities. So in fact, after they called their clients and segment the effect of the crisis by different segment of clients, they realized that they could continue to provide loans in the rural areas, but stopped providing loans in the urban areas by type of services, for example. So we have seen a very strong reactivity of organization and investors to cope with the crisis. We have example of projects that were being planned for many years, having been pushed like digitalization, repayment by digital means, for example, accelerated to answer to the crisis. So I think it's a good lesson also. We see some very difficult cases, and I'm sure Loïc and Johan can also share what has been difficult, but we have seen also some coordination of efforts, and I put on the right hand side also this example of MOU and pledges that have been signed among investors to collectively answer to the crisis and adapt their answers to the situation of the microfinance institution. So as for the fight against poverty, microfinance institution cannot do everything, but have been quite reactive and can learn also in the long run from the crisis to better know their clients and understand that collecting information from their clients on the short run can help them take informed decision on what could be the most adapted and useful services for their clients. So my answer to the last question, does microfinance need to be revisited? Yes, of course. Any organization should be revisited, and time of crisis are necessary moments to revisit any type of organization. No sector can remain the same in this challenging and evolving environment. We would like to see even more coordination of actors to face the crisis among investors, TA support, regulators. In some countries, we have seen the regulators maybe overreacting, sometimes not reacting enough in front of the crisis in terms of moratorium of debts, for example, or what can be done and what is necessary to protect against over-indebtedness for their clients. So it's nice to have seen how the coordination can help find some joint decision. Of course, microfinance can still grow and scale, and digital transformation to reach more clients will be necessary. Of course, always with adapted services, not just to outreach for outreach. We have some digital programs which are reaching a lot of people, but people are not using the product, so it's not enough to have a digital account. It should be useful for the clients, but digital transformation can help also reaching more clients. And what we have learned also is that knowing more about the clients, what are the outcomes of the products and services provided, what are the actual changes for the clients, can help make sure that you provide products and services that are that answer to the needs and preferences. So that was the entry point also of microfinance, and what is necessary for microfinance to really fight against poverty. And for us also, the link with the sustainable development goals is very important. We don't have time today to discuss this. It can be another discussion at another U-turn discussion, but the sustainable development goals can provide also a motivating framework and shared framework among investors and private entities and microfinance organizations to reach some shared goals. And as we said, promoting savings and insurance and green products is also something that still need to be developed, because we have seen the role of savings, insurance, emergency loans for the clients to cope with the crisis. So for the clients to be resilient to the climate change and potential next crisis, or the current crisis, those services of savings and insurance beyond just access to loan remain very important for the microfinance sector. So that's the next agenda for the social performance task force, this group promoting social performance management, for which, by the way, Loïc is the chairman. So we are very happy also to count on the view of Loïc on this group. And it's also a coordination of players that can be played by the European Microfinance Platform, by European DFIs, for example, that can also help pushing the sector into a coordinated direction to fight against poverty and to provide support in time of crisis. But yeah, I'm optimistic, and let's see what Loïc and Johan think about it.
Okay.
So we'll stop sharing my screen, and if there are, I think there were some questions maybe.
Yeah, well, I would propose that we engage into questions and answers after the three presentations, but
Okay.
it's a good idea in any case to point to the possibility to ask questions. Huh? So you have these questions and answer at the bottom of the screen, or at the bottom of the window of the Zoom screen. Please go ahead and ask your questions. And you can also, in fact, vote on others' questions, so that you can change the priority in which the questions. That's also an interesting feature. Okay, Loïc de Cannière, I pass the floor immediately to you for a reaction on the presentation by Cécile.
Okay, I try to share the screen. Hope it works. It worked in the tests prior to this meeting, but now it doesn't seem to. I'm afraid, Barbara, you will have to help. Ah, no. Is it there?
Yeah.
Yes.
Okay. Okay, great.
Okay, go ahead.
All right. So thank you, Tom. Let me go to the first slide. So I was invited to give a critical view on impact and on the relevance of microfinance, but more from an investor point of view. I'm managing partner at INCOFIN. We are so-called impact investor. We invest in emerging countries with double purpose. We want to achieve social impact, but also provide a fair return to our investors. And historically, actually, we started investing mainly in microfinance. But since some 10 years ago, we also extended our scope of investments to other areas, mainly agriculture, but also now increasingly food, nutrition, and water. We are managing about 1 billion euro of investments spread over some 350 companies, microfinance companies, but other companies as well, agricultural companies. And I have had the opportunity in the last 20 years to meet a lot of micro entrepreneurs. I think I've been talking to hundreds of them in different countries. We are a team of 75, very multinational, spread over different offices in the world, these orange dots you see on the map. And our investor base, give some of our investors on the left-hand bottom side. So we have, on the one hand, development banks, such as European Investment Bank or the IFC, part of the World Bank, but also pension funds, asset managers, banks, families, family offices, and individual people. We are based, headquartered in Antwerp. Now, talking about microfinance, I first wanted to say something about our mission, because microfinance is not explicitly mentioned in our mission. Our mission is about inclusion, social inclusion of people, financial inclusion. That's what we think is really matters to improve lives of people at the bottom of the pyramid, of people that are less privileged and more vulnerable. And so actually our aim is to indeed create an environment where entrepreneurship is being supported. And we see microfinance precisely as one of these tools to foster entrepreneurship. At the same time, and Cécile already mentioned it, we notice, of course, that microfinance, certainly for those clients at the lower end of the spectrum, which face unexpected events, volatility, insecurity, theft, etc. For them, microfinance can be a way to smoothen income and consumption. It is also an instrument that catalyzes social dynamics. We see microfinance clients getting more self-confident. It works on gender balance. It works on dignity. And finally, we think that microfinance increasingly has become a platform where institutions offer also other products and services which are extremely important. Cécile also mentioned it, and I would particularly underscore the importance of SME loans, so loans to small and medium-sized enterprises, housing loans, crop insurance, for instance, for smallholder farmers. And I agree with Cécile that microfinance is not a panacea. And by the way, we as INCOFIN decided to diversify our portfolio away from microfinance into other areas such as SME finance and agri-value chains. On the other hand, it has a function. So it has a function, but it has to be framed in a more general universe. Microfinance also has evolved a lot over time. And actually, this webinar, when we started discussing about it, it originated actually at the occasion of an interview in a Belgian newspaper with Nobel Prize winner Esther Duflo. And the journalist was very, well, mentioned that Esther Duflo was very critical for microfinance. And I discussed this with a number of people, and we all agree that we have the impression that when Esther Duflo, and who am I to say that because I'm not an academic, certainly not a Nobel Prize winner, but always have the impression that she refers a lot to a specific type of microfinance, very often Indian microfinance, group lending. And that type of microfinance certainly has its merits, but it's also not necessarily representative for modern microfinance. And so coming back to this group lending methodology to which she refers often, we think it has a lot of, or a number of shortcomings. It has a system of, well, forced solidarity among the members, which can be extremely unfair. And I've seen cases on the ground which were indeed extremely unfair, where other clients are forced to repay the defaulting member. Duflo also says that, and rightly so, that many of the micro borrowers are not necessarily entrepreneurs, and that their businesses might not always be profitable, and then borrowing money can be fatal actually. As a response over time, microfinance banks, microfinance institutions have started offering more and more individual loans, the granting of which is much more based on assessing the repayment capacity and the needs of an individual client. And we think that makes a lot of sense. And from there, we also saw the emergence of SME loans, which are definitely very impactful because they directly fund the growth of an SME, investments, employment. You can measure the impact of such loans in a very direct way. And I like to refer to the case of Congo, where we invest quite a lot, and where we saw the market change over time. So in 2005, let's say, there were only large banks, commercial corporate banks, such as the Belgian Belgolaise, who was financing the mining industry. But for SMEs, there was no way to access funding and financing. And then you had ProCredit Bank coming in from Germany. And since then, you have a flourishing SME lending universe, which makes a lot of sense and has a lot of impact. And as I said, if you look at MFIs today and MFI banks, the solid ones, the serious ones, they do not only offer traditional microfinance, but they also offer insurance products, agri loans, housing loans, and they offer technologies like payment systems, digital services, etc. So when at INCOFIN we invest in a microfinance institution, we try to separate the, let's say, the good ones from the less positive ones. And we do that by applying the famous universal standards of social performance, which Cécile described and which she and her organization have transformed into a very practical tool, which, by the way, we use. And we are certainly very vigilant on the topic of client protection. I think client protection is, of course, essential. Microfinance, as Cécile said, can be risky. There are aspects which are in a gray zone on pricing, on the way to recover loans in case of defaults, on avoiding over-indebtedness. And there have been irresponsible excesses in the industry. And microfinance has, of course, been under attack for these reasons, and rightly so. Now, I'm myself on the board of two microfinance banks in Africa, and what I see, or what I think for myself, is what does really matter when we invest in a bank. For me, it is mainly the attitude of the management is very important. So do we work with the management that really aspire to improve the lives of their clients? And do they understand the needs of the clients? Do they measure their client situation? Do they behave responsibly? Do they care about their clients? And do they work hard on developing adapted products and services? And to become very specific, I would like to give an example of one of the MFIs I think is very interesting from an excellence point of view. It is an MFI in Cambodia in which we have been investing for a number of years. We were shareholder, we had a board seat, our representative in Phnom Penh was on the board of this bank. And it is operating in a very complicated country, Cambodia, where there is actually an oversupply of microfinance. There is a permanent risk of over-indebtedness, and Cambodia has been negatively in the press for this reason since quite some time. Now, this microfinance institution has been able to navigate between all these problems and to put the interest of their clients very at the heart of their concern. This is not a small institution. It manages a loan book of 370 million US. It has close to 1 million account holders. It serves 13,000 villages. and it applies both group lending and individual loans. And they have been very careful in avoiding over-indebtedness. For instance, they discourage their clients to refinance their microloans, whereas in the majority of the Cambodian market, the microfinance institution will just automatically renew the loans when they come to maturity after 6 months, and which means that microfinance clients are wearing the burden of debt for years, and that is even increasing over time, and then increases this famous over-indebtedness. And for those who know Antwerp, and sorry for using Dutch now, but in Antwerp we all know mevrouw Leemans. Lenen bij mevrouw Leemans is lenen bij een vriendin. It is a loan shark, Cécile from the place here. And this is precisely what we want to avoid in microfinance, but unfortunately it has happened, and it still happens in microfinance, and this is something we absolutely need to avoid and to make sure we don't have in our portfolio. Now, AMK has also done a number of, well, extremely interesting initiatives. I strongly believe in the importance of crop insurance. They have a lot of smallholder farmers, but they can get into trouble if there is some problem, disease with a crop, they can't repay the loan. If that crop is being insured by a proper insurance, they are protected from defaults. And I think this is a very, very important product. They also developed a specialized app with information on prices of agricultural products. Then in the specific context of Cambodia, they developed a product for women, single women, to protect them during their pension, during their old age, and they called it Happy Old Age. And this product was actually funded with revenues and profits that came from other activities of the bank, which is, well, nice to see and very generous. And then finally, they also took a lot of positive actions to empower women, both at the level of their staff and at the level of their customers. As a final message, when it is about microfinance and the impact, I also would like to underscore the role that microfinance has played for the entire impact and social business industry. If you look at the history of microfinance, it emerged from NGO-initiated activities, but it became clear over time that the activities were self-sufficient from an economic point of view, and they became viable and they became separate entities. But progressively, we also now see entrepreneurial activities and investment initiatives coming about at the bottom of the pyramid in other areas, inspired by microfinance, for instance, in agriculture or in other areas. And for us, what we have qualified this as microfinance being a kind of laboratory for other impact sectors. If I take the example, we are now venturing with INCOFIN in the water sector. You see small water companies emerging in Asia, in Africa, in Latin America, serving affordable water to low-income households. We think it's very interesting, and it would not have been possible without the emergence of this microfinance movement. We talk about a sector, if you take all the impact investments of more than $700 billion US in sectors such as forestry, food agriculture, renewable energy. And well, this is my last word perhaps. So even if microfinance is not perfect, I think it is a major catalyst for developments at the bottom of the pyramid. And I think this is a reality that Duflo and consorts should absolutely grasp. Thank you, Tom.
Thank you. I think Esther Duflo is not with us tonight. It's a pity. She might have given a good reaction to this. Okay, but well, we can still try to contact her, of course. But in the meantime, I give the word to Johan for a reaction on the presentation by Cécile and perhaps also by Loïc.
Sorry, I was looking for my microphone. Thank you, Tom, and thank you, Cécile and Loïc, for these interesting contributions. First of all, I would like to thank the organizers of this seminar to have created this opportunity for this exchange of ideas about the role of microfinance within the context of the U-turn webinars of the UCSIA. And since the idea of these webinars is to reflect about the world after Corona, I took the liberty to focus my presentation not only on the fight against poverty, but to complement it with some references to the urgent need to transform our current unsustainable model of consumption and production in order to redress our current life-threatening eco-destruction. I will also talk not as a practitioner, so I actually learned a lot from the two other speakers, but more as an academic, and I will adopt a critical and ambitious development studies perspective, maybe also trying to push myself of thinking anew some of the things I had been thinking about already before. Now, I think, first of all, that in order to reflect about the role of microfinance in a post-corona world, it is important to adopt a systemic view. And therefore, I would like to start with a bit of historical context, because I think what happens today can only be viewed and should be viewed from that context. First of all, it's important to remember that modern microfinance emerged out of the crisis of the development state in the 1980s, a crisis that led to structural adjustments, the policies of austerity and liberalization and globalization, which in many countries of the global south contributed to desagrarianization, to desindustrialization, and to the growth in the urban informal and rural informal sectors. This structural adjustment, of course, led also to financial liberalization and privatization, the replacement of state development banks by private actors, which in turn led to financial market imperfections and, in fact, a huge gap of underserved and unserved small and medium-sized clients. And it was microfinance which managed to fill that gap, and in that way also clearly contributed to mitigate the social impact of structural adjustment. And in order to do so, I think from the end of the 1990s, since the first Washington summit, we saw the start of a worldwide coordinated effort led by the consultancy group of assistance against the poor, against poverty from the World Bank, which actually aligned NGOs, which transformed into viable microfinance institutions, some banks, regulators, donors, rating agencies, consultancies, as well as academics, into a gradual mainstreaming of microfinance and today financial inclusion through three historical phases, where first the emphasis was on creating sustainable micro credit organizations mainly, then towards the promotion of the integration of those viable microfinance institutions into the financial system, and today in the movement for financial inclusion, where also other financial actors like banks and insurance companies are brought into this business, you could say, of serving the bottom the bottom of the pyramid, as Loïc just referred to. And I think it is clear that this alignment, this assemblage, as I call it, this neoliberal assemblage, has led to a huge success. If you look from, I mean, the microfinance industry, and there is much more indeed, as Loïc said, beyond microfinance. I will come back to that. But the microfinance industry today serves more than 200 million clients, more than 100 million poor, which was the initial target of the Washington summit, and which looked completely fantastic at the time. And the financial inclusion movement aims to serve and to reach 2 billion people. It's also fair and necessary, I think, to stress that there always has been a strong focus on poverty and social impact. And despite, I would say, also the presence of some mission drift, but but I would not exaggerate that. And recently, to this emphasis on poverty and social impact has also been added a focus on environmental sustainability with green objectives in order to come to what is today called the third or the three bottom lines of microfinance: financial sustainability, social impact, and environmental performance. Of course, the original promise of microfinance was to be an effective tool of, I would say, massive poverty reduction. The initial image was the heroic female micro-entrepreneur capable through a series of small loans to lift herself out of poverty. This became, of course, also the justification for donor subsidies and investments, mainly into this mainstreaming of the industry and creating the industry. But because of the social and the NGO origin of many microfinance institutions, I think, and this is very important, there always has been an undercurrent of resistance, which gave rise to what I would call a hybrid assemblage. So within this assemblage of microfinance actors, I think there always has been a certain diversity and diversity of strategies and opinions. And for example, you can find for a long time and still today some institutions being very reluctant to regulate. And indeed, as of course Cécile is one of the important representatives of that, because of the social objectives of many microfinance institutions, there has been this very strong movement of social performance management, the creation of indexes and tools to help institutions meet their social objectives. And today also there are initiatives to add a green index to that set of tools in order to help microfinance institutions manage their environmental strategies better. I would say the problem with many of these tools is that most of the focus is on intentions and on immediate outcomes, and it is more difficult to see how they link to final impacts and to what extent there is indeed sufficient possibility to focus on final impacts assessment. And of course, this also risks making social performance an instrument of greenwashing. I was supposed to stimulate debate, so I formulated a bit critical now. I think that if you look at social performance and in the mainstream views today, I think, and this has been stressed also by Cécile and Loïc, I think there is a consensus that the initial promise of the initial typical microfinance was a bit oversold, and that it is more a tool of poverty alleviation. It contributes also to the financialization of poverty, which is viewed as a positive thing, which enables poor people to manage better their vulnerability and to smoothen their consumption. There is also a stress today on the insight, very different from the beginning, of course, that credit to the poor creates a risk of over-indebtedness and might be dangerous. And there is clearly a view that microfinance is not a tool for transformation, that it's actually jobs in the mainstream economy which are key. Now, turning more explicitly to the questions, how effective is microfinance against poverty and eco-destruction? I think one remaining problem, despite the fact that there are other initiatives, but we know that 70% of the poor in the world are involved in livelihood strategies in rural areas, and many of them directly related to agricultural activities. And most of microfinance, most of current microfinance is urban and peri-urban, focused on commercial activities, service activities, much less productive sectors like agricultural and industry. Also focus very often, but this is gradually changing, possibly a focus on the very poor and so-called missing middle of more SME, more viable enterprises. So this, of course, indeed, again, illustrates the fact that most of microfinance is more involved or more preoccupied with mitigating effects of structural adjustment, mitigating effects of the current dominant model. And there is a very limited questioning of that neoliberal model where I think many causes of poverty and eco-destruction are actually to be found. For example, if we think about the dispossession of peasant farming for plantation monoculture or due to cheap imports or the lack of an industrial policy for small and medium-sized enterprise. So this is linked to what I call a kind of predominance of microfinance narcissism. So a dominance of a focus on financial service delivery and also a relatively passive demand-driven versus a transformative demand-creating approach. There are, however, exceptions to that, and I think that a lot of cooperative farming linked to farmer organizations articulated with an agricultural value chain approach indeed have several substantial elements of structural transformation. They try to promote the inclusion of small farmers. They try to control processing and to create more access to an equitable sharing of the value added that is created. But I think that today this is still a minority, maybe a growing minority, hopefully a growing minority. And one of the reasons, of course, is that these approaches are not so profitable and also represent, to a certain extent, a mismatch with the financial market approach. Of course, because of the huge investments in the sector, there also has been a massive effort of impact assessment. This, first of all, has been a complicated conceptual and methodological challenge because microfinance is not a single thing. I think Loïc was very right in saying that Esther Duflo and others are very often focused on short-term small loan systems, but of course, these are indeed dominant in the world, or were at least dominant, but it is certainly true that microfinance is a much more variegated landscape. And then there's a problem that there is a variety of social impacts, a variety of green impacts. There's doubt about what green is, what social means. There is a variety of context and time frames. Nevertheless, but mainly focused on the short-term small loans, and this repeats what, of course, has already been said. There have been efforts to summarize all these massive impact assessment efforts. And indeed, so there have been many systematic reviews, and today even a review of those systematic reviews. And out of this important effort come very clear conclusions, I think, in the sense that most of the results are positive, or at least there are more positive than negative results, but these are heterogeneous and inconsistent, which point at the very important interaction with context as a determinant of final impact. Also, the current approach to microfinance produces very little transformative effect. It's mainly about superficial improvements, liquidity management, much more than investments in transformation. Something which is very important from the, today I think in the Corona context, from the initial efforts at impact evaluation, is that there is, in a context of crisis, there is a significant initial impact on the self-employed poor, but it rapidly reaches a plateau. But indeed, this implies that microfinance can be a good tool for economic recovery without transformation. And in that sense, I think the narcissism of microfinance is also reflected in impact assessment through this quest for attribution to microfinance as such. And it misses and it under focuses on the context-dependent complex interactions, which will actually determine to a large extent whether or not microfinance services will produce beneficial or larger or smaller effects. And in that sense, to also make my contribution with the critique on Mr. Duflo and the randomized control trials. Randomized control trials are, in my view at least, very poorly equipped to identify these interactive impact mechanisms of the variegated microfinance and financial inclusion. And indeed, microfinance is not a panacea. It can only be part of a transformative strategy which should address the social institutional processes that create poverty and eco-destruction in the first place. So in that sense, I think the current microfinance produces very little transformation, is mainly preoccupied with poverty evaluation. Microfinance plus approaches, to which the previous speakers already referred, are indeed promising a value chain perspectives, small and medium-sized enterprises, because they have more potential for transformation. But the real issue is they need to articulate with the broader social institutional transformation that we need today. And in my view, this means we really are in need of a new assemblage to overcome the current neoliberal liberalization, globalization assemblage, and to think about systemic change, which might also mean that we need to reinvent old-style cooperative banking in the current context linked to social and environmental movements with a political agenda, and possibly to the extent that states change their policy, that we need also to rely again on state-led transformation banks. Now, can microfinance cope with the Corona crisis? I must admit that this is a theme where I feel less familiar with. I only have some references to the Nicaraguan context, which I try to follow. It is clear, I think, indeed, that microfinance and the network it represents can be very important for the survival and the rapid recovery of the informal sector, mainly petty commerce and service sectors, which today seem to be the hardest hit by the crisis. But the problem that emerges is, how do we deal with debt, and how do we deal with over-indebtedness? So do we condone debt of those who do not have the ability to repay, or do we risk over-indebting the clients? And of course, this links immediately to the fact that the crisis also impacts the microfinance institutions themselves, because they are incurring large losses very often, are in a need to recapitalize, and in that sense, a very important question appears, of course, in who will pick up the bill of that. I think it's very, very positive. If I compare, for example, with the way in which the microfinance crisis in Nicaragua at the end of in 2008, 2009 was dealt with, that there is a much more coordinated and globally responsible response today, as was illustrated by the things that Cécile brought in. The question, of course, is from a U-turn perspective, if I want, I would say is, can we maybe use this need for recapitalization also to connect it to an adjusted assemblage, maybe in a perspective of a global Green Deal? And of course, this raises questions of where to focus. Do we need to continue focusing on the saturated urban petty commerce, or should we redirect to agricultural, industry, energy? The key question, I think, is there a need for a transformation of the current economic model, and can and should microfinance contribute to it? For me, it is very clear, and I come to the final question here, it is very clear that we need a more fundamental transformation of our current neoliberal economic model. And I think that microfinance can and should contribute to that transformation. But of course, microfinance is only and can only be a part of that transformation to sustainability. I think it is certainly positive that microfinance today is gradually entering into a lot of these new sectors. But I think the key challenges are to evolve to a transformative role and not to be just passively market demand taking, to abandon this microfinance narcissism and to articulate to broader changes and alliances, and to form a new global alliance for transformative microfinance. To avoid throwing the baby out with the bathwater, I would say, I think what is built has a huge potential, as Loïc referred to, I think, to become an instrument in the kind of further transformation of microfinance that we need and that we need in order to be able to contribute to this broader transformation. It is definitely not a grand revolution that we need, but a process of building on existing initiatives while questioning others. And I think the key question is, and that's a question to which I do not have the answer, of course, is what kind of transformation do we actually require today, and to what extent is this evolution towards this evolution in impact investment towards entering in sectors like water, energy, agriculture, to what extent is that really addressing what we need today, and to what extent is it actually capable of contributing to the change that we need today? Because I think that the systemic context constrains much of the possibility that we have in that sense. But maybe we can come back to that in the discussion afterwards. Thank you.
Okay, thank you very much, Johan. Yes, so we can go to some questions and answers, or well, to some questions, and then see what the answers can give to them. The first family of questions that came in fact, they have been answered already to an extent, I think mainly by Loïc, but I think it might be good to put them on the table. It's more on explaining how the microfinance institutions are working, how they have been financed, for example. Where do the funds come from? Who are the shareholders? Is there help also from the state to CERISE, for example? And what is the role played by the European Microfinance Platform? Perhaps Cécile can give some answers to these questions.
Yeah, on the European Microfinance Platform, I think it's those kind of platform like the Social Performance Task Force, the European Microfinance Platform, where you put together stakeholders from different groups, donors, investors, academics, consultants, technical assistant providers, and financial institution, financial service provider together. Even if they may be in competition in the field, like the rating agencies, for example, but they will work together to coordinate efforts and share lessons and build together. So they have some action groups or working groups. SPTF has a social investor working group, for example, which has been very active in the time of crisis to coordinate the efforts and launch the client interview tool, for example. So I think those platforms, the EMFP, European Microfinance Platform, or other, plays for me a very important role in coordinating the efforts, sharing lessons learned, capitalization, lessons learned, and building together. Because I think if we want to move forward and not to reinvent the wheel, each and every one of us, when we start on those aspects, it's important to have those type of coordination bodies, which can help us not starting from scratch. And for example, Loïc was referring to the tools they are using in due diligence to collect information on social impact and social practices. Those tools have been worked together among different investors who may be competitors when it comes to going to invest in one organization, but that have been working together to align their practices and support. So that's for me very important platforms to exchange on practices. Mm-hmm. And sorry, the first question was on funding? No. Sorry.
Yeah, funding.
Yeah, so I think there are different levels from what we have heard from Loïc from INCOFIN. It's the funding and the shareholders which are investing, or asset manager and asset owners private or public asset owners who can invest in the organization to support them for the loans that they will share. And there is some support from development finance institution or multilateral donors who can also support at the sector level, at the infrastructure level, or for technical assistance to help build strong and resilient organization. So there are different levels of private and public funding, and most of the time it's blended finance, not just public or not just private, but different channels at the level of the organization or at the level of the infrastructure.
Mm-hmm. So there is a blended finance also means there is a large extent of subsidy, or is it also mainly self-financing, or how can we see this? I think that is also a bit behind this question on, yeah, is there help from the state in MFI?
I would say that it's a blended support because there are some public funding specifically for technical assistance. So we have DFIs like Proparco, FMO in Bio in Belgium, supporting the organization through funding for technical assistance, and also multilateral donors like European Investment Bank, for example. And there is private funding, either from any one of us who can invest in some of the savings products to go to for the development, or private entities who are investing through and funds managed by organizations such as INCOFIN to support also the microfinance organization. But maybe Loïc, you want to complete on this?
Yes, if you allow me, what I would like to complete is that it's true that development finance institutions, so publicly owned development banks, are quite active in this area, but they behave as if they were private investors, and in a very capitalistic way, if I may say so. So many of the operations are in the meantime self-sufficient and are able to return to their investors, including to these development finance institutions, which can offer indeed some grants for technical assistance, capacity building, etc. But that's rather marginal vis-a-vis the majority of the operations.
Okay, just perhaps a final question on the functioning of microfinance institutions more generally. So we can talk about credits, about savings, and about insurance. That's, I think, the three big families of products. How big are these portfolios, or should we even include another part or another category? Loïc?
You want me to answer? Well, I think savings is still very early days. It's a very complex way of a product. You can imagine measuring whether or not a farmer has been hit by weather circumstances. If he owns only a plot of 5 hectares, is extremely complicated. So you have to construct all kinds of technology to do that. So it is still challenging to get that up and running. We are still often in a bit like a test phase with this kind of, or pilot phase with this kind of products. So originally, of course, there was a lot of loans and of course the savings are important, but I would say that insurance is still a young product.
Okay.
I think, of course, Tom, if I may add, I think an important aspect, of course, is also simply transfer services and having access to accounts. And today, in the development of digital finance, this is very important, in particular for sending remittances from abroad. This is a hugely important flow of finance, hugely important for the poor, which is, I think, an important segment that is often forgotten. So I think I would share the view of Loïc that I was a bit surprised that you mentioned crop insurance. So, I mean, I do agree that it would be wonderful to have a functioning crop insurance system, but I haven't seen yet any, I mean, the microfinance revolution produced a way of doing microcredit in a reasonably profitable way at a reasonably acceptable cost. But with crop insurances, I think the problem is still very, very complicated. Because theoretically, of course, it's index-based crop insurance, but that's not very perfect. Well, it can be improved indeed still, but it will mean huge investments. And I think also that if you look more carefully about the existing systems, either they involve a huge amount of subsidy from the state or some kind of donor, or the premiums are relatively high versus the payments that the clients can get. So I would not be, I mean, I share that it would be very important, but let's not, I mean, let's be serious and not assume that it's that solution is already there. And in a way, that's the same for savings, as you said, indeed. So I think it's the microfinance institution. I think it's still very much microcredit, but that's evolving. Fortunately, I would say. But also in the segment of well, just managing money, and that's something that was not there in the beginning.
Mm-hmm.
And I think, Johan, it's also the same for digital finance. And I refer also to the first question we had on, digital finance should help reduce the cost. That's not at all what we see for now, because it's all those new digital finance, or at least the fintech, which are only digital loans. They are testing their models. They have huge share of the loans which are not repaid. So it's a very costly model. So for the moment, we don't see at all that digital finance is less expensive. It may be the case, and in some cases it works. But I think we have to learn the lessons also from the early stages of microfinance, where we overpromised on the fight against poverty. We should not overpromise what we can do on savings, on crop insurance, on digital, and just work, see what works in the field, learn from what we can see in the field. And that's the effort of coordination that we are advising, maybe changing some models and learning also to answer to some of the questions from what the traditional links and organization are doing to move forward. And I think we have a lot in front of us. I think also in terms of impact and impact measurement. When we started 20 years ago in social performance management, we said that it was too complex to measure impact because we knew about all those questions of attribution, randomized control trial, whatever. And we said, let's see what microfinance organization can do internally with their processes and practices. And but now we are ready also to collect more information on clients thanks to the digitalization. So we have more information on what are the changes observed for the clients. It's also how we build the capacity of the organization to use this information. Also, they have plenty of information on their clients, because if they want to protect clients against over-indebtedness, they need to know about their profile, about their revenues, incomes. So they have this information. So there are plenty of opportunities now to not to prove impact, but to do some data-driven management with information on clients. And that's what we try to push also now. And with the incentive of monitoring what you are doing on the sustainable development goals, it's appealing for the investor. It can be appealing for the financial service provider to collect more information on their customers, to understand what are the changes, not proving anything as Esther would like us to prove, but at least having information on the clients to take informed decision at the board level and at the management level to make sure that we are going into the right direction with loans, savings, and insurance.
Mm-hmm. Okay, thank you for this, Cécile. Now let's look at the relationships between the monetary or the financial economy and the real economy. Huh? It's a bit. You took different options there. I think, Cécile, you talked about well, the ability of the sector to fight poverty, and there you said that, well, this capacity is limited. It depends on the context. And I was going to ask a question about that context, because you didn't specify that a lot. But then there's also the more ambitious questions asked by Johan. He says more or less, I think perhaps I exaggerate, that perhaps the microfinance sector is good in alleviating poverty, but it's not good in transforming the economy. So that's another step, and that connects perhaps to what Loïc has been saying about the jump from towards SME loans. Perhaps, Cécile, could you comment on the ambitions the microfinance sector should have? Is it on fighting poverty, alleviating poverty? Do you see the challenges there, or do you also see a role for that the microfinance sector could play in transforming the economy?
Yeah, I think I would tend to say that we have to be cautious on what we can expect also. In some cases, some organizations may tend to transform the economy when there are very efficient cooperative models, for example, and working with farmers and working with the value chains. I think there are some interesting models, but maybe not yet fully recognized or at a scale that will be fully transformative. And in terms of realistic objective, I think when we take the framework of the Sustainable Development Goals, for example, we say, what can be the logical entry point for microfinance organization is the SDG 8 on employment and decent work condition. That's what you can do on a reasonable way, give access to financial services that will support productive activities and make sure that you ensure decent work condition on the SME that you support, that there is some check on environmental and social risks. That's the reasonable minimum objective that you can have. Then some organization may play a role on the first SDG on poverty when they are really willing, there is a real commitment from the board and from the management to work on targeting poor people and vulnerable people and adapting services to this specific population. Maybe they will not transform the life of their clients, but they will help them being financially healthy. That would be the first point. And then depending on the organization, they may choose to work also on SDG 5 on gender equality, SDG 10 on general inequality, focusing on some priority groups, on the young people, on some minorities. Some of them may want to focus on education because they provide non-financial services and financial education. Some of them may want to provide access to renewable energy. So then I think it depends on the organization, but the minimum that one MFI should commit to is to SDG 8 on employment and decent work condition, because that would be something that is possible for a microfinance organization. Then in terms of transformative effect, I think it depends, and that's a question also that we have in the chat box. When you are in countries with populist government which are not convinced by the microfinance organization, it may be complex when there is less funding available. So it's why we defend also coordination of efforts, and that's the most efficient way to move on.
Okay, over to Loïc. Loïc, so you mentioned these SME loans as perhaps allowing graduation of enterprises, small enterprises, and even employment creation. But there, the question would also be: is this still all part of the neoliberal model, or would it also have transformative potential?
That's interesting. First of all, I think it's not so easy for a microfinance institution to shift to SME finance, because it's another, you need other type of staff working on that, more specialized. It's more difficult, it's risky, it is very capital intensive, so it needs more capital. Is it transformative or not? And I like that word. Partly yes, but partly no, because often these SMEs are using very low standard technology, I would say. So I see an issue there in what is really needed to transform an economy. It's not only funding or providing finance to SMEs, that's one thing, but it's also improving the productivity and the efficiency of that type of SMEs, which is not foreseen. I mean, who is doing that?
Okay. I have perhaps a last question, which is a question on debt policy mentioned by Johan. So do you, because we are now in this very specific context, in fact, of a general macro crisis, COVID-19, and in Central America, for example, this has also been complicated by another hurricane. So there is a lot of things arriving in the real economy, in fact, and so how do we see this in the microfinance industry? Is this would this lead to a more general debt policy that needs to be reflected on? Is this a danger for the microfinance institutions? That people have difficulties of repaying their credits? Johan?
Well, I think it's the essence, at least if you do great operations, that people repay you. So definitely it is a problem if too many people default. And I think at least what I can see from Nicaragua, for example, the average portfolio in the crisis has gone down. I mean, this combined political corona hurricane crisis, but the impact is decreasing portfolios by almost 50% across the board. And again, similar and even higher losses than in the crisis of 2008, 2009. So of course, that's a big problem. And of course, then my question was, okay, now with corona, I mean, it's not only a problem in the microfinance world, but also here in Belgium, of course, all these enterprises that are suffering from corona now, do they get subsidies or do they get loans? Will they be able to repay these loans? So it's a similar problem, I think. But if you allow me, Tom, maybe I didn't have the opportunity to answer to the previous question, and I had an interesting idea about that, I think, because I think both Cécile and Loïc said quite rightly, I think, we have to be cautious. There are a number of interesting models, and I would say, and they quite rightly say, yeah, there are limits to what you can expect from microfinance institutions and from investors today, because they live in a context. And maybe I can refer, we are engaged in a project in Nicaragua, an action research project together with the FDL, in which we try to reduce deforestation due to extensive cattle ranching. And well, the conclusion of that is if we do not manage to start overall changes in the way in which the local economy works, we have no possibility to redirect cattle ranching and to stop deforestation and encroaching of indigenous communities. And I think in the same way, an impact investor today, a microfinance institution, faces a number of serious constraints that the microfinance and the financial sector alone cannot address. And that's why I'm talking about this assemblage. And I think, of course, I only have 15 minutes. We have to avoid thinking in binaries. There does not exist something like a neoliberal model, although I use that word. But I think we all tend to agree, I think, that we need to transform a lot of the things that we are currently doing. And I think that microfinance, and in particular more transformative forms of microfinance, do have a potential to contribute much more than what they can do today. But that will only be possible if we manage to connect it to broader changes, to political processes, to things like the European Green Deal. And I'm not even sure that the European Green Deal is good, by the way. So, because I think the challenges we face today are so fundamental that, well, we are really in a systemic crisis. So we still need to find a solution. But I think I find hope in the neoliberal assemblage in a way, because it clearly demonstrates that if we manage to align the actors in a new direction, that we can change reality substantially in 10, 20 years. Because that, I mean, I would not underestimate what it meant to create this huge sector in the 2 or 3 decades that we had to construct it. It's a tremendous achievement. Of course, it is not perfect at all. It just alleviates poverty, but I criticize it, but I would not in the sense of that now just get rid of it. I prefer this huge sector of poverty alleviation over having nothing. But I think there is much more to do still, and this opportunity exists in my view.
Thank you for this, Johan. Yes, indeed. That's one of the take-home messages, perhaps, of tonight as well. That it's all about the evolution of microfinance institutions or the microfinance movement. That it was able to create a space and also to realize some sustainability, I suppose. And of course, there are a lot of challenges ahead, and we have been discussing many of these tonight. But yeah, it's time to end the seminar. Many thanks to the 3 speakers, Cécile Lapenu, Loïc de Cannière, and Johan Bastiaensen. We had a nice view, perspective on the microfinance world and how it is coping in the current crisis, and well, what are the challenges before us. So thank you very much.
Okay.
Thank you.
Very nice to be here.
Lots of questions ahead, but that's nice.
Yeah, well, there are some questions in the Q&A. Perhaps you can take a short, brief look at them. Some of them we didn't have the time to discuss.
Yeah, and I like the idea of the global Green Deal, Johan. So because we are
let's build it together.
We are pushing for the green dimension to be a 7th dimension on the universal standard for social performance management, and really to make it as essential as the social aspect. So that can be motivating.
In the
Frederick Habris and myself have just sent a blog about this to the European microfinance platforms.
In the same context,
I'll look at it.
For Africa, this famous external investment plan, the 44 billion program of the Juncker plan, it's impossible to connect from our side. So you cannot access it in one way or another to support financial inclusion. It's very strange.
Yeah.
And I agree, to be transformative, you would need to connect all these worlds with each other.
Yeah. Okay.
Okay.
Let's continue doing our best.
Thank you for this opportunity to connect
Yeah,
and thank you for the participants.
Yes.